everyone, it's Rick Dawson from deedgrabber.com, and I've been waiting a long time to have today's guest come and give us a talk on tax lien and tax deed investing. And this time I'm actually talking about attending the sale, buying a tax lien, buying a portfolio of tax liens, or even attending a tax deed sale and making some good money with it. So our guest's name is Joanne Musa, otherwise known as the Tax Lien Lady. And I've known her now for a couple of years, and I'll tell you, the thing that really impressed me about her from the beginning was she's one of the few tax lien gurus, I guess you'd call it. She probably doesn't like that term, but one of the few tax lien gurus who really tells it like it is when it comes to tax lien investing. And I haven't seen Joanne's presentation yet. I'm about to watch it with you right now, but you can bet it's not going to be one of these infomercials where you just see a bunch of pretty houses on the screen that were acquired for $180 and it was easy and that's all you got to do is go in and buy a tax lien and you get a house for $200. I can guarantee it's not going to be like that. It's really going to be what it's like to be a tax lien investor and how you can really make great returns on your money, and I bet occasionally get super bargain properties through a tax lien. And so we're going to talk a little bit about tax deed sales, I believe, as well. So a little bit more about Joanne before we get started. She's a tax lien investing trainer, as I mentioned, and a consultant in the industry, and she works with investors who are ready to build their own portfolio of tax lien certificates, which earn way above market returns. I mean, right now in the bank, I think you get 1 or 2%, barely keep up with inflation. And I personally know tax liens can give you double-digit returns all the way up to even, I don't know, depending on the situation, 20, 30% in some cases. And so her informative and straightforward articles about tax lien investing, you'll see those all over the internet, and that's how I first heard about her. So she's on all sorts of, all those big real estate investing websites like reiwired.com, foreclosure.com, reiblueprints.com, and she even appears in the book, The Venus Approach to Real Estate Investing, and she's also a contributing author to a recent #1 Amazon bestseller called Trust Your Heart, Transform Your Ideas into Income. So as founder of TaxLienLady.com, she's helped thousands of people from all over the world invest in tax lien certificates and tax deeds. And for more than 5 years, she's focused on interviewing experts from around the country on all aspects of tax lien and tax deed investing so that you can get the best and most current information on tax lien and tax deed investing. So Joanne, do I have you on the line?
Yeah, I'm here, Rick. Thank you for that wonderful intro.
Oh, sure. I'm so glad you're able to come and speak with us today, and really, I'm really excited about learning a lot myself about the tax lien and tax deed investing game, because to tell you the truth, I did it a few times and got discouraged because I really didn't have any information on it. I kind of just went out and tried to do it on my own, and that's how I developed my strategy that a lot of my subscribers are familiar with. But I know there's a lot of opportunity to make some great returns in the tax lien investing industry, and you're certainly the one to show us how to do it. So with that, why don't we get going? Are you ready to get started here?
Yeah, I'm ready to go. I'm ready to go. I'm going to show everybody how they can jumpstart their tax lien portfolio for 2011 this year. This is a great year to get involved in tax liens because of the economy. There is more available. And you're absolutely right, Rick. You're not going to see in this presentation pictures of nice houses that you could get by investing in tax liens by only spending a couple $100s on a tax lien. It really doesn't work like that. I am going to tell you the truth of the matter here. So let's get going.
Great. And there's plenty of truth that's exciting. That's exciting enough for us to be able to use. So I'm looking forward to it, and I'll hand it over to you. I'm gonna mute myself out, and if I got a question, maybe I'll come back in. All right?
Okay, great. Okay, I'm going to get acquainted with everybody a little bit, and then I'm going to go into why I invest in tax liens and why it is such a great investment. But let me tell you a little bit more about me and how I got started. I've been investing in tax liens not 20 or 30 years or anything like that, but since 2002. I've been teaching others to do it since 2004, and I've been online with my website, TaxLienLady.com, since 2005, and since then I have multiple websites and blogs. I have no background in real estate, or at least I had no background in real estate when I started getting involved in tax liens, and no background in finance or investing. So if I can do this, folks, anybody can do this. I've purchased hundreds of liens, and I've trained and educated thousands of investors around the world. And this is what we're going to talk about today. I'm going to talk about what is a tax lien for those of you that aren't familiar with tax lien investing. And then I'll tell you a little bit about how I got started. And then we're going to go over some mistakes that I have made and that you can avoid, and that way you can be totally profitable with your tax lien investing. And then we're going to talk about some myths about tax lien investing, like the one that we've already discussed, that you can get a house for $200. It really doesn't work like that. And then we're going to go over the basics of tax lien investing and how you can get started now, and then I'm going to give you the next steps. Okay, so let's start out with what is a tax lien. Well, municipalities cannot meet their budget without collecting property taxes. So what do they do when people don't pay their property taxes? Well, when taxes are left unpaid, the county can sell the taxes to investors. That's how some states do it. Investors bid for the right to pay the taxes, and they receive the interest rates that the county would normally charge. Now, let me tell you, those rates are pretty decent. Now, Rick, when he was introducing me, he was talking about tax liens, and he was saying that you can make up to 30%. Well, in some states, the default rate is 36% per year. Okay, that's Illinois that we're talking about. It's 18% per annum, per 6 months, but that's 36% per annum. So, in some states it can be as high as 36%, but in some states it's as low as 8%. Of course, those are not the states that you want to invest in. Okay, why invest in tax lien certificates? Well, where else can you get 8%, 12, 18, 25, or 36% on your money without the risk of the market? You see, when you have a tax lien, the market can fall, the real estate market can fall, it doesn't matter. Your tax lien is still earning whatever you got at the tax sale on that tax lien certificate, okay? When you hear, one of my pet peeves is some of these gurus say, well, it's government guaranteed. Well, they don't mean that you're guaranteed to get paid. What they mean is that the interest rate that you get is guaranteed by the government. And it's real estate secured. So as I said before, it doesn't mean that you're guaranteed to get paid. Nobody's guaranteeing that you're going to get paid on your tax lien, but guess what? If you don't get paid on your tax lien, you can foreclose on the property. So what is securing your tax lien is the real estate that you have a lien on. And you're in first position. So let's say that there is another lien on that property. Well, you are the first one that's going to get paid, because a tax lien comes before a mortgage or other notes or judgments that might be on that property. No brokerage fees. This is something that you can do yourself. I have done it myself. But there are also ways to have this done for you where you don't have to do it yourself. And guess what? The fees for doing that are lower than brokerage fees, okay, because you're not paying brokerage fees. You can start with very little money. Most investments where you make double-digit returns, you have to put a lot of money down. If you're investing in real estate, you need a lot. You either need your money or somebody else's money, but you need money. You need a lot of money to get started. But when you're investing in tax liens, you can get tax liens. You can get a tax lien for $200 or under $200. The problem is that when people say that you're likely to get a house by spending that much money, that's not likely. But you can start building your profitable portfolio of tax liens with as little as $200. Now, here's some more reasons to invest in tax liens. You don't need good credit. Okay, it's not like buying a house or any other investment. You don't need good credit. You don't even need to be a citizen of the United States or live in the United States. There are many foreign investors that invest in U.S. tax liens. You can do it from your computer. Now, not in every state, but some states do have online tax sales, and you can do this from your computer. you can invest with funds from your retirement account, your self-directed IRA, or a solo 401k. Okay, so you can use money from your retirement account and have those profits accrue tax-free, tax-deferred, or with a Roth account, tax-free. There are more tax liens and tax deeds available now than in the past couple of years. So now is a good time to start doing this. You know, especially, you know, so many people are disillusioned and downright depressed with the stock market because they've lost a lot of money in their 401k. And I have people email me from time to time saying, you know, we lost half the money in our retirement account, and these people, some of them are already retired, and they want to know, well, how soon can we build it back up again with tax liens? And the thing is to get started now, because you can make those same returns that you did in the stock market. You can make that with tax lien investing. All right, so let me tell you a little bit about how I got started with tax lien investing, but before I tell you how, I'm going to tell you why I got started. Back in 2000, we had sold our condo in New Jersey, and the real estate market was taking off. We thought we could find a place to rent where we lived. Well, there was nothing available at the time in the county that we lived in. So we looked outside the county that we lived in, still couldn't find something to rent, so we thought, okay, well, we'll buy a property. And we were moving from a two-bedroom condo to, we wanted a three-bedroom home for our growing family. I had 3 boys. My husband and I had 3 boys, and we could not find something within our price range that we could afford in an area that we wanted to live in. The market in New Jersey was taking off, and I knew nothing about real estate and very little about investing. But since we couldn't buy a house to live in, and eventually we did find a place to rent, we went from a 2-bedroom condo to a tiny 2-bedroom apartment, and for 4 years. And during those 4 years, we looked for a place in New Jersey, couldn't find one, and we finally decided, well, you know, let's find an investment property if we can't find something that we want to live in. But again, I knew nothing about real estate, very little about investing. I had some money to invest, but not enough to purchase real estate in the state of New Jersey where we wanted to live. We didn't have the income to qualify for financing for a home in New Jersey. And so I figured, well, you know, I knew that investing in real estate was the way to get wealthy. At least that's what I thought. And I was reading up on everything I could, so I figured we'd try pre-foreclosures and foreclosure sales. Well, at that time, even now, I didn't have the know-how to do that. We have since then bought a rental property that we own, but we bought that at an auction. I brought all these programs on how to invest in real estate with pre-foreclosures, foreclosures, no money down, other people's money. You know what? I couldn't get myself to follow through, and one of the reasons I couldn't do that is because I don't really like negotiating with people. And that's one of the reasons why I love tax liens, because I don't have to negotiate at all. But, you know, back to how I got started, I didn't have the know-how. At that time, we didn't have the capital or connections to make it work. And, you know, the market for pre-foreclosures at that time was flooded. Homeowners were receiving scores of letters from investors that wanted to, you know, buy their home for next to nothing. But it was so easy for them to refinance at the time that, you know, most people would just refinance and pay off that second mortgage or that mortgage that was foreclosing on their property. They'd be able to get out of that situation without having to sell their home. And then, so I figured, well, if that didn't work, I'd try foreclosures. And I went to foreclosure sales in a couple of different counties in New Jersey, and the foreclosure sales required fast cash. You had to have, in New Jersey, you had to have 20% of the bid price in certified funds at the sale, the day of the sale, and then you had 10 days to come up with the rest. So you really didn't have time for financing. You had to have the cash. The other thing was, let me just go back a minute, at those sales that I went to in New Jersey, a distressed home, I was prepared to bid up to $300,000 on a home, mind you. But distressed homes in the 2 counties that I went to foreclosure sales went for over $300,000. Okay, so that we kind of found ourselves locked out of the market at that time. But you know, during this time, I had read something. You know, of course, I was reading all these books on building wealth and real estate investing, and I read Rich Dad, Poor Dad by Robert Kiyosaki, and I read another book that I read was Multiple Streams of Income by Robert Allen. Both of these books mentioned tax lien investing, but you know, it was just a mention. They really didn't say much about it at all, just that they both admitted that that was one of the areas they used to increase their wealth. So I wanted to find out more about that. Well, the only book in print that was specifically about tax liens at the time was The 16% Solution by Joel Moskowitz. And that book was already 10 years old. Now, it's since been revised. It was revised in 2009, and actually the author sent it to me to review it, and I did write a review on it, and it's a pretty good book. But here's the problem with tax lien investing. It's very different in every state. So most of the books that are out there are very general. They really don't give you specific information for each state, and New Jersey was really a different animal than most of the other states, and there was no specific information about my state. So, you know, what did I do? Well, you know, I kind of shoot from the hip, so I just started going to tax sales. But now there are a dozen books and programs on tax lien investing, but I gotta warn you, they are not all written by experts. Now, there are a few books you see on this slide. There's only 2 of them that I recommend because they're written by lawyers. No, I'm sorry, there's 2. 2 that I recommend because they're written by lawyers. Okay, just like The 16% Solution is written by a lawyer. And you'll find these on the resources page to my website as well. But
Joanne, the rest of the books were just written by people that just said, "Hey, this sounds like a hot idea. Why don't I read a few books myself and write one myself?" Maybe.
Well, to be perfectly honest with you, I haven't actually read the other books. I've read excerpts from them, and some of them might be okay, but here's the problem. They're usually written by somebody that has invested in only one state.
Okay.
And they're like I said before, each state is totally different. And they try to do a general thing, and then so what they do is they do all this, they research how it works in other states, but what they don't realize is just because the laws exist in a state for certain things to happen don't mean that they actually happen. Unless they actually get on the phone and call the tax collectors and find out what really happens, they don't really have the right information in some of those books.
And I've noticed that a lot of times when somebody becomes really ingrained in a certain state or a certain area, they tend to assume certain things work the exact same in another state, and they don't even question whether it could be different, and that could probably be a fatal mistake potentially, to assume everything, if anything, works the same from state to state. So I think that's a very good point. I'm glad you brought that up.
Yeah, isn't that true? Isn't that true? Okay. All right, so what I did, as I told you, I shoot from the hip. I just started going to tax sales in New Jersey, and I learned by trial and error. And yeah, did I make mistakes? Yes, I did. But here's what I did. I made those mistakes with very little money. The first lien I bought was like $40-some, you know. It turned out to be a lien on a worthless little piece of land, which I think I kind of knew when I bought it, but I just wanted to learn the process. So that's how I started. And since then, a lot has happened. First of all, I was going to all these tax sales, and I met another investor, and we started working together. Well, little did I know this guy is a millionaire or multimillionaire in New Jersey that owned quite a few businesses, and he asked me if I would work for him. So I started working for him, and I learned faster because he had a lot more money than I did to invest. So so I was investing his money as well as my own. And I had to hire people to work for me so that we could go to more tax sales, because one thing that is very different about New Jersey, and this is true of most of the New England states also, is that they don't have big county government. Most of the government is on the municipal level. So all the tax sales are done on the municipal level, not the county level. So here's one of the things that happen, Rick, when people buy these books that assume that it's the same in every state. They wind up calling the county clerk to find out about tax sales, and the county clerk doesn't have a clue. And the reason why the county clerk in New Jersey or in any of these New England states don't have a clue is because it's the municipal tax collector that does the tax sale. It's not done on the county level. So as far as they're concerned, there are no tax sales. There's no county tax sales.
Yeah, we don't have that. We don't do that. Instead, there's what, 500 and something of them in New Jersey, isn't there?
In New Jersey, yes, there is. There is.
Yeah.
And now here's the great thing about that. You know, most states have a tax sale. Each county has a tax sale once a year, and in most states, it's all around the same time of the year. But in New Jersey, all these municipalities have them staggered throughout the year, so that any given day in New Jersey, there's a tax sale somewhere.
Perfect.
And on some days, there could be like 8 tax sales in one day, all in different counties, or in sometimes the same county, there's a couple of sales on the same day, same time. So that's why I had to hire people to work for me. Yeah, that is a benefit.
You can keep your money in the game all the time, probably. I hate to steal your thunder if that's what you were going to talk about, but
no, but you know, that is a really good point. You can in New Jersey, you can keep reinvesting your money. So anyway, I hired people to work for me so that we could go to more tax sales. And we didn't go to every county. There are some institutional investors who do this. They go to every tax sale in the state of New Jersey, but we concentrated on only 5 counties. And I started training these people to do the due diligence and bid at the tax sales. Meanwhile, I was building my own small tax lien portfolio while I do this. So let me just go back for a minute. So then, while I was doing this, I noticed this void. There was still this void because, remember, at the time there was this only one book in print about tax lien investing, had no information about New Jersey. And online, there was a void online also with good, affordable information on tax lien investing. And so I started filling that void. I started my website. I wrote my first ebook. I actually pre-sold it 1 chapter at a time. There just was a hunger for the information. And then I started doing teleseminars. Now I do webinars, but I did teleseminars. And I interviewed people in different parts of the country so that I could have a resource for not just for one state or one county, but for how it worked in different parts of the country, both tax deed investing, tax lien investing, and redeemable deed investing. So that's how I got started doing that. Now, we're going to switch gears and talk about mistakes that will cut into your profit if you don't know what you're doing with tax liens. But before I do, did you have any questions for me, Rick?
No, I'm anxious to hear more. I'll try not to interrupt you too much, but when I have one, I'll let you know. Thanks.
Okay. All right. So let's talk about the mistakes that will cut into your profit, because really tax lien investing is a very safe investment, much safer than the stock market, because again, there is a real tangible asset backing up your lien. It's not like when you purchase a stock. What do you have when you purchase a stock? You have a piece of paper, and there's really nothing backing it up. All right? It's really only sentiment, the sentiment of the market. That's all you have. And if that goes, your stock loses value. Okay? With a tax lien, yes, you get a piece of paper, but there's an asset behind that piece of paper. There is that real estate. That's what's backing it up. But however, there are mistakes that will cut into your profit, and I'm going to show you how to avoid them. Okay, and this is a mistake, and it's not a big one. It's not going to cost you your investment, but it will cost you your time, and time is money. And the number one mistake that I see new people do is they're doing their due diligence too soon. Well, what do I mean by that? Is that, half the properties on the tax sale list, the original tax sale list, are going to be paid off by the time of the tax sale. Now, I got to tell you, I'm seeing this change. In today's economy, it's less than half. But in the years that I've done this, typically it was half the properties in the list were gone by the day of the sale. So that means if you got that list, and this is what we did when we first started, we would get that list 2 weeks ahead of time, because it's usually published at 4 weeks ahead of time. So we would get that list at least 2 weeks ahead of time. We would start doing our due diligence on those properties.
And
well,
Joanne,
here's the thing.
I'm sorry to interrupt you. Just for the people that are brand new, talk just for a second again about due diligence, exactly what that is and why it must be done before you start out buying a tax lien.
Oh,
because
sure.
after all, the tax lien is secured by the property, so why do you really need to do anything more than just have that going for you?
Oh, exactly. Very good point. Well, again, we talked about that the lien is secured by the property. But there are many reasons why people don't pay their taxes. And, some reasons are that they can't pay for personal reasons, but another reason is that they're tired of paying taxes on a property that they can't do anything with. So there's not only houses in these tax sales, there's vacant lots. And I'll tell you, I like vacant lots. I like buying liens on vacant lots. Why? Because there's less competition on them. But, however, I have to do more thorough due diligence on vacant land, because what if you buy a lien on a piece of vacant property that for some reason can't be built on? How are you going to sell it? How are you going to get your money out? So you always want to be thinking of how you're going to get your money out of your investment if you do get to foreclose on the property, which I'll tell you does not happen very often with liens. As a matter of fact, I haven't foreclosed on a property yet. I've started foreclosure on a couple of properties, but they pay off. Sometime during the foreclosure, they pay off. And guess what? In this bad economy, they're paying off. And guess who's paying? It's not the homeowner. Exactly. The banks are paying. So I love it when there is a mortgage on a property. As a matter of fact, I have 2 liens on, actually 3 liens, because I have 2 liens on one building lot and 1 lien on another. On building lots, and the builder is not doing well, but you know what? There was a bank loan on these properties, and a couple times I sent pre-foreclosure notices out to the owner just to try to scare him into paying, but to no avail. Well, this time a notice was sent actually from another lien holder that has a subsequent lien to mine, and he was going through, he actually spent the money on a lawyer, was going through the foreclosure, did the title search, and sent it to the banks that have the loans on these properties. And you know what? They're paying. So I'm getting paid. I'm going to get quite nice redemptions on those,
right,
on those lots.
So just to clarify everything, first of all, this is something people are probably not used to. You're more than happy when these pay off. You're not even necessarily looking to acquire the property, although in a lot of cases it might be somewhat of a windfall for you. But you're really in it for the investment, and you're more than happy to get your return on something and have it pay off. And so when you target a property with a mortgage on it, you know there's a good chance it will pay off, and you'll get a much higher than market return, right?
Oh yes. Oh yes.
Okay. And then the second thing. Oh, I'm sorry. Go ahead.
I was just going to give an example. In one in particular that I invested in, I think I bought the first one in 2007 and then paid some subsequent taxes, paid a total amount of taxes of $7,500, and it's now going to redeem, and I'm going to get back over $12,000 on that one.
Wow. Oh, that's awesome.
Yeah. So, you see what happens when you put your money away and you leave it there for a while and get the, and I'm not disciplined enough, Rick, to do that on my own. So if I put the money in a tax lien and just let it accrue like that, and then the lien redeems, and then I make my money, and then I'm sometimes still not disciplined enough to put that back in. Because, you know, there's tuition payments and other things that I can use that for. But you know what? That's why I do some of my investing inside a self-directed IRA. So that money goes back into the IRA and then is reinvested. And I can't use it until I retire.
I hope everyone can already see how the realities are a lot different than the infomercials on TV, but yet that's I mean, what an example. Put in $7,500, get out $12,000, and be secured the whole time. That's kind of the realities that we're going to be talking about here. But the second thing I just want to clear up before you go on is a good percentage of these liens you really don't want to buy because you don't want the property that you're going to get. That's just the bottom line, right? They're really not secured by the government at all because you're just going to end up with the property. And that's really what due diligence is all about, is do I want this property if I end up getting it? Isn't that pretty much the bottom line of what you're trying to do? Okay.
Exactly.
Very good.
It consists of looking at the assessment value of the property, the market value of the property, maybe doing comps, and then you know, if you can drive by the property, or at the very least, if you can't drive by the property, look at it on a map, you know, an aerial photo or something like that. However, with land, aerial photos don't really work very well. You can't really tell what you're looking at. So with land, I really suggest that you either look at it or have somebody look at it, and then there's a couple other things I do. Here's some tips for you, really good tips for doing due diligence on properties, on land.
Because I would have thought it was the opposite with land. Wow, I would have thought the aerial view would have been just fine for land. But
no, because
like
you can't always tell. Let me ask you this, Rick. How can you tell by an aerial photo? Can you see the grade of the property? Can you see if no? Can you see if there's water on the property?
Maybe some of the time.
Can you see that?
Yeah.
No, you
if
can't.
It's been raining, maybe.
There are ways. So here's what you have to do. You have to look. There's certain maps you could look at that show floodplains, that show wetlands and stuff like that. You have to look at that. But that doesn't always tell you. So what do? You call the zoning officer.
Okay.
And you find out if it's a buildable property or not. That's what you need to do. Check it out with the zoning officer. And there's one other thing that you can do. Every state has some kind of environmental website. So you check with your state's environmental website. You check the known environmental sites, the properties that have environmental problems. They usually list them. And you could check that against all the properties that you're going to bid on and make sure that you don't bid on any properties that are in or near an environmental problem.
Okay, very good.
Okay.
So
those
that
are
all
two.
plays back into, sounds like you don't want to do all this stuff if that property is not even going to be at the sale, is where you were going before I interrupted you. Sorry. Okay.
Exactly. You don't want to waste your time. All right. So that's, you know, mistake number one. And again, you know, as we were talking about before, if you do your due diligence on the tax sale properties 2 weeks before the tax sale, as I did when I first got started, you're wasting your time. Now, here's the problem. I was hiring people to do this for me, and they had to get paid whether we bought anything or not at the tax sale. So I learned my lesson quickly about that. Yeah. And we stopped doing our due diligence 2 weeks before the sale, and we would do them only a couple of days before the sale, sometimes a day before the sale, because when you go to municipal sales, typically the tax sales that I went to, only a few properties were in the sale. Now, if you're going to one of these county sales where there's hundreds of properties, here's what you need to do. You need to narrow that down to 1, 2, or 3 municipalities within that county that you're going to check out. And then that will narrow down the amount of properties quite a bit for you. And then you could do your due diligence. You might be able to do it 3 days before the sale, a week at the most, but don't do it 2 weeks before the sale. You'll be wasting time. Even if you do it 3 days before the sale, some of those properties are going to come off the day before. Okay. Now, mistake number 2. Now, mistake number 1 was doing your now I'm getting tongue-tied. Doing your due diligence too soon. Okay. Mistake number 2 is not doing your due diligence. Okay. And this is what we just talked about. There's no guarantee that you'll be paid on a lien. The guarantee is the property. So you need to check out the property and make sure if you did foreclose on it, you can sell it, that it's worth something. Because if you buy a lien on a junk property or a property that no one wants, you won't be able to make any money on it and you'll lose your investment, okay? Not only that, once you foreclose on it and the property's yours, you'll be paying the taxes on that property. Okay? So, you know, there are other reasons people don't pay their taxes other than personal reasons. And one is that the property's no good. All right, now mistake number 3 is not knowing the rules. Very important. You need to know the terms of the sale. And many of these counties will post them online. Even if they don't have an online tax sale, many times the tax sale information is online. And one of the things you need is to have the correct method of payment, because if you don't have the correct method of payment by the deadline, which in many cases is immediately after the sale, you will lose any successful bids and be barred from future sales. And if you had to put down a deposit, which you sometimes have to, especially with the online sales, you'll lose that as well. So you need to check out those terms beforehand, and you have to have the proper methods of payment ready. And if you don't have the proper information before the tax sale, you won't be allowed to register. And I want to tell you, I go over this in my courses. Especially in my Build Your Profitable Tax Lien Portfolio course, we spend a whole class on how to prepare to go to the sale, what you need to do, what information you need, what paperwork you need to fill out. And it's different for different tax sales. It's different for a lien sale than it is for a deed sale or a redeemable deed sale. And by the way, just a little aside, because you know we've been talking about how great tax liens are for getting double-digit returns, but not so great for getting the property. Well, if it's the property you want, then tax deed sales and redeemable deed sales are the way to go. Okay, so there is a way to do that. You're just not going to do it for $200. Okay, you know, if it sounds too good to be true, it probably is. Okay. You'll not be allowed to register for the sale after the deadline, and different tax sales had different deadlines. Now, where I go to tax sales in New Jersey, typically you could register right before the tax sale, but in many of the county sales you cannot register right before the sale. Some you can, but some you can't. Here in Pennsylvania at the deed sales, at Monroe County you can register right before the sale, but I don't recommend it because it's very hectic. It's best to register at least the day before.
And Joanne, there's all sorts of just oddball rules you'll encounter, right? I mean, in our sale, I know that if you owe taxes on any properties in that county, and you bid, I think you only get half of your bid back, and you're not allowed to buy. They say, no, you owe us taxes already. We're not letting you buy someone else's taxes. They'll make you apply that for the taxes you owe, I think. So.
Oh well, now is that in Indiana, Rick?
That's in Indiana, yeah. So
now that's unusual.
Yeah, they definitely do that.
I'll tell you why that's unusual, because
go ahead.
Because Indiana is a lien state, and most lien states don't make you sign an affidavit saying that you don't owe any taxes. But guess what? Deed states do. All the deed states do make you sign an affidavit. Yeah, they'll make you sign an affidavit saying that you don't owe any taxes. As a matter of fact, in Texas, you don't sign the affidavit. It goes to the clerk, the county clerk, and they have to sign off on it saying that you don't owe any taxes.
Wow. How about that?
And that's because you're actually purchasing the property, and the whole purpose of the deed sales is to return that property as quickly as possible to somebody who's going to pay the taxes.
Right. And they don't want someone that's already a scofflaw getting into their hands, huh?
Yeah, but that's the first time that I've heard of a lien state doing that. So you see, folks, that how it's different in every county, and that you really have to know the terms of the sale before you bid, because it would be very easy for you to bid on something in Indiana if you didn't know that, and then when you went to pay for it, find out that you couldn't get it, and that you'd only get half your money back. I mean,
right. And so it's not that complicated, but it's, like Joanne said, it's definitely worth just sitting down and really spending the time to know your territory that you're in, right? pretty much
Yes,
what you got to
and
do.
you know what? That's why I have my courses too, to help people to hold their hand through this. Now, some people can just do it on their own, but you know, some people want somebody to guide them through, and that's what I'm here for.
Great.
All right, so mistake number 4 is not knowing what you are bidding. Now, remember, mistake number 1 was doing your due diligence too soon. Number 2 was not doing your due diligence, and number 3 was not knowing the rules. Well, number 4 is kind of related to not knowing the rules. It's not knowing what you're bidding. It's very important. Usually, besides the rules or the terms of the sale, you can usually find a document online saying terms of the sale or bidding rules. But then there's usually another document that says bidding procedures, and you need to pay attention to that as well, because every state has slightly different bidding procedures. And I do, in my courses, I go over the 4 major bidding procedures, but they can differ in every state. So it's really important to know what you're bidding. And of course, this goes back to knowing the terms of the sale. And you know, there's 4 major bidding procedures, which I go over in detail in my course, but just to let you know about 3 of them. You could be bidding premium, or interest rates, or percent ownership in a property. Now, these are very different things, so you really have to know what you're bidding. Premium is when, and I believe, Rick, this is the way it works in Indiana.
Yep, you're talking about Indiana now.
Yeah, the price of the lien is bid up. So the interest rate remains the same, but it's effectively lowered because you're bidding the price of the lien up. You see, you don't get interest on what you pay over and above the lien amount. Some states do give you interest on your premium. Actually, I think there's only 1 state that does that. Most don't give you interest on your premium. Some do not give you your premium back if the lien redeems.
You really got to be careful then, I bet.
Yes, yeah, Colorado.
You don't want that
does
to be much, yeah. Oh, wow, okay.
Yeah, they don't pay a lot of premium in Colorado, and that's wrong. Why? Okay, most other states where you do bid premium, they do give you your premium back if the lien redeems. Okay, the other thing that could be bid, in other states that don't bid premium, they're usually going to bid either 2 other things. Either the interest rate will be bid down, and that's what happens in Illinois, that's what happens in Arizona, that's what happens in Florida. New Jersey is very interesting. This is what's different about New Jersey, is that not only can the interest rate, and it's the only state that does this, by the way, not only can the interest rate be bid down to 0, but then the premium can be bid after that. And you don't get interest on your premium. You don't get interest on your premium. You do get your premium back if the lien is redeemed in 5 years. And the redemption period is 2 years, so you know you do get your premium back in most cases. But the reason why investors do that in New Jersey is because once they have the lien, they can pay any subsequent taxes if the owner doesn't pay them, and get the maximum rate, which in New Jersey is 18%.
Ah, great.
So that's why so there's reasons why bidders do different things in bidder states. Like there's a reason why in Florida the interest rate gets bid down to 0.25%, but not to 0. Why would somebody bid down to 0.25%? Well, because there's a minimum penalty in Florida, and it's a 5% minimum penalty. So there's reasons why things happen, and it all goes back to what the bidding procedures are and what the terms of the sale are.
So Joanne, sometimes you have to look deeper into it, because like in the case of New Jersey, while you might not make anything at first, that first initial payment you make for the lien, that might be a relatively small part of the investment. Once it goes 4 or 5 years, all the other payments you've made are making 18%. So it almost, if you're seeing that most of the liens are taking a while to redeem, it doesn't hurt you to to not make anything on your first small portion, as long as you can make it on the subsequent, right? If it's a good underlying property and all that. Okay.
Not only that, but there's also a penalty in New Jersey as well that's paid on the certificate amount.
Oh, beautiful.
And then it's between 2 and 6% depending on that amount. And in New Jersey, you know, taxes are quite high in New Jersey. And if you pay, some counties have, I mean, some municipalities have what's called a 6% year-end penalty, which what happens there is that if you pay over $10,000 in a calendar year of subsequent taxes, then you get an extra 6% on that.
Wow. Okay.
So
that can get you where you want to be.
Very large. That's why in New Jersey you find that these institutional buyers will pay very large premiums for these liens, whereas in Colorado you'll find that they won't pay very large premiums. So, and there is a reason for that. So that's why, again, it's important to know what's being bid. It's important to know the terms of the sale. Now, there's also another thing that can be bid, and that is the percent ownership of a property. Here's how this works. In some states, like in Iowa, for instance, the percent ownership can be bid down, which means that it's the investor willing to accept the lowest amount of ownership in the property should they foreclose on the lien that gets the property. Now, this is a problem for investors, because if you only own a percent of the property, you can't get a loan without having somebody else sign off. You can't sell it without having somebody else sign off. So that is a problem with that can be a problem. So it's really important to know how that works if you're bidding in one of those states. And of course, it's important to know if the state that you're bidding, if that's what you're bidding.
Yeah.
Okay. Now, mistake number 5 is not foreclosing on time. What do I mean by that? Well, I think I skipped something here. This little go-to-meeting box is in my way, so I'm just going to minimize that. Okay. Let me go back here. Okay, tax liens expire. Now, in New Jersey, they expire in 20 years, so you have plenty of time to foreclose, and the redemption period is 2 years. But you'll find that the states that have shorter redemption periods usually have shorter expiration dates. For instance, yours in Indiana, Rick, I believe is shorter. Your redemption period is shorter and your expiration period is
I believe it's a year redemption. Well, I know that for a fact, but I believe that if you don't petition for your deed within 6 months, you're out of luck. So that's pretty short compared to 20 years.
Exactly. So that's why you really, again, this goes back to the terms of the sale, but it's not always, it's not always written out on the terms of the sale. You've got to go back to the laws of the state statutes to find that out sometimes. Or, I find it easier, rather than to try to read the state statutes, to just ask the tax collectors, because they know this stuff. Or ask a tax lien attorney, or ask another tax lien investor. That's sometimes easier than trying to read the state statutes. But different states have different expiration, and sometimes, by the way, these expiration dates are listed on the websites, on the county websites, with the information for the tax sale as well. Now, also in Indiana, they have what's called a commissioner's tax lien sale, and in the commissioner's tax lien sale, the redemption period is shortened, and so is the expiration date on those liens. So you really have to foreclose right away, or you can lose your investment. Okay, but as long as you follow the rules, you're it's a very safe investment, but you have to follow the rules. So if you don't foreclose before the lien expires, as I mentioned, you can lose your investment. So that's why it's important to track your liens. Now, I have a software program that does this. It's not my program. I market it for somebody else, and it's very customized. It's customized now for a few states, for New Jersey, Indiana, Florida, and Arizona, and Nassau County, New York. So, and the reason why it's Nassau County, New York is because Nassau County is probably has the biggest tax lien sale in New York. They have a big tax lien sale every year. It usually lasts about 3 or 4 days. And most in New York is deeds. They sell deeds, but there's a few counties that sell liens, and Nassau County is the biggest one. So we do have it customized for those states, and I find it an excellent tool and a real help to me in tracking my liens. Now, if you're in a state that, you know, it's not, if you're investing in a state that's not one of those states that I mentioned, there is another software that will track your liens for you. But here's the thing, it doesn't really matter whether you use software or whether you do it with a spreadsheet or whether you do it with, when we started out, we did it on paper. We had a file or a notebook for each municipality that we invested in. But you have to have some way of tracking your liens because you have to keep track of this. Okay, you have to treat it like a business, folks. Okay, it's an investment. So treat it with some respect, and it's a really good investment. But it's not a get-rich-quick scheme. See, that's where people, Rick, that's where people get disillusioned with tax lien investing. They see these gurus on TV and they see these pictures of properties. And by the way, there was an expose on one of those infomercials that was only about a year ago.
When they were making that infomercial, I got to tell you, it was funny. They showed some of the actual pictures of the properties when they got them, and they didn't look quite like they did when they were on TV, did they?
No, well, here's how this guy, we don't need to tell you who it was, but here's how this guy did it. He went to a state that doesn't even sell tax liens anymore. They've now switched to a deed state a couple years ago, Oklahoma, and he bought these liens that were vacant properties, and he bought them from the county. So they were pretty much ready to foreclose. They had been vacant, and they were knockdowns. These properties were knockdowns. They had to pour money into them, basically to rebuild the houses to get them to look like what they looked on TV.
Put in as much as they were worth or more, probably, right?
All right. So, well, they might have been able to sell them for a little more than they put into them, but I'm sure with the time that they put into it, right, it was more, like you said. And so they may have bought the lien for a couple $100, but there's no way they spent a couple $100 and had, an $80,000 or $100,000 property. They spent upward, $40,000 or more, or sometimes close to $100,000 to do that. So
I believe another one they had sold to this person on mistake and had reversed it and given the people their property back, and yet he still would show that in the infomercial as a successfully obtained free and clear property for $400 or something. It's tempting. It's tempting in this business because, Joanne, you'll agree, in the history of tax lien investing, there's probably been somebody that got a house like that, for a nice house for $200. Probably one somewhere. Just not
I'm
often enough
sure,
to probably
Rick,
ever happen to you, to us. So.
I'm sure, Rick, 20 years ago, that happened to tax lien investors. But as people became more affluent and property became worth more and loans became easier to get, that went away.
Right.
And as more people got involved in tax lien, but guess what, Rick? There still is a way to get properties for pennies on the dollar, but you're not going to spend $200. I mean, is it worth it to go to a tax deed sale and pay $20,000 for a property that's worth $80,000 or $100,000? Sure it is.
Sure, if you get that opportunity.
And that can still be done. And not only that, but you could go to a redeemable deed sale and do that, where you're either going to come away with the property, or if you don't get the property, you're going to make at least 20% on your money. So how good is that? Georgia right now is a great place. I mean, Texas is a state that everybody's been talking about for a long time, but there's a lot going on in Georgia right now. And and guess what, folks? If you don't have the time to do this, but you have the money, there's people that will do this for you, and they don't charge that much to do it. They're called tax lien investing agents, but beware. You know, make sure you get somebody that's reputable. And that's one thing I do in my course. I recommend who to deal with, where to go, both tax lien investing funds and tax lien investing agent, because remember I told you that I've learned to invest with some money in my self-directed IRA so that I'm not tempted to eat the profits, to use up those profits, and that they do get reinvested. Well, that money, I don't invest that myself. I have a website to take care of. I still invest in New Jersey and a little bit in PA, so I have my own investing to do. So this is how I can invest in other states like Illinois, where you get 36%, like Arizona, which is online, and Florida, which is online, and Colorado. I don't do that personally. I invest in a fund that does that. They do that for me. They average about 16–17% return, and I'm quite happy with that.
And folks, I would not pick a tax lien agent or a fund without a recommendation from somebody that you trust, because I have seen them come and go, and they get paid for placing the money, and so it's not such a concern how secure the tax liens are that they buy, and then you see it kind of all explode a couple of years later. So you really need to pick the right person. Yeah.
That is the important thing, and the only funds that I recommend are either ones that I invest in myself, but you know what? I don't invest in all of them, because some of them are like hedge funds, and they have very high minimum investments. And you know, I don't have that much money lying around in my self-directed IRA. I only started it a couple years ago. So, but you know what? I know these fund managers. I've known them for years. I've seen them in action. And I know that they know what they're doing, and I know that they're trustworthy people. So I recommend them, even though I'm not personally invested with them.
Great.
But those are the only ones that I recommend. Either I have to know them personally, or I have to have my money invested with them before I recommend them. So, so that's another thing you get as part of my training. But again, it's not a get-rich-quick scheme. Okay, now here's some myths about tax lien investing, and these are the ones that we talked about. You can start making money with only $200. Well, here's the thing, folks. You know what? You can start making money with only $200. As I mentioned before, you can purchase your first tax lien for $200, but here's the thing. Let's say you're making 20% on $200, 20% per annum. How much money are you going to be making?
$40.
Okay. Right. So, you know, $40 a year, it's, you know, you're not going to get rich that way. So the more
you can't start
money,
making big money.
Right,
you can't
exactly.
start making big money with only $200.
So, but here's what you can do, and this is what I have done. I let it add up. I invested small amounts. I have 2 tax liens on one property that is going to redeem on June 1st. My first investment was a little over $400, and I've been reinvesting in this tax lien each year because, as I said, in New Jersey, once you own the lien, you get to pay the subsequent taxes if the owner doesn't pay them. Well, on this particular property, the bank paid the taxes every year, but it didn't go into the tax sale for taxes. It went into the tax sale for sewer charges. Because you see, any utility payment that you make to the municipality or to the county, in some states, can also be sold in the tax sale. You get a tax lien certificate for it, and it's just like a tax lien. It is a tax lien, basically. And you could pay the taxes on that property if the owner stops paying the taxes. Well, in this case, the taxes were paid by the bank, but I got to pay the sewer taxes every year because they didn't pay their sewer charges. So over the years, I paid, you know, $400 or $500 a year over the years. Now, this is back from 2002, mind you, right? Well,
Wow.
I finally, after sending a couple letters to the owners and never getting any response, I finally sent a letter to the bank, and they're redeeming this lien. Okay, so it's been it's been about 10 years, but, well, almost 10 years. It's been 9 years since I bought my first lien, and remember, I've been adding to it every year until about a couple of years ago. I think I stopped, or last year. I didn't buy it last year. Well, I am going to almost double my money in 9 years on that tax lien.
And that wasn't all upfront money. That was just paying in as you went, too. So that's a big difference.
Exactly. Yeah, so it's not that I paid all that money 9 years ago. I paid the first $400 9 years ago, and each year I added a little bit to it. And now I'm going to get over $8,000.
And you know, Joanne, if you don't mind, this is another example of being kind of closed-minded because of the area you're in. Now, I'm in an area where there's just a simple one-year tax sale. You buy one tax lien, and that's it. You foreclose or you get paid, and that's it. And so I always thought, well, what's the point of buying a tax lien for $200? I'm going to make $40 at best. What a waste of my time. And so I think everyone that says you can get started for $200 is kind of full of it. But my eyes were closed to the fact that there are states where you can pay the taxes for years and years, and this is just sort of like your foot in the door, right, Joanne? So that you can start your own little investment here that can add up to thousands and result in your money doubling when you don't even have all that money in at the beginning. You're just paying it in over time. So this thing is really like, what, a $4,000 or $5,000 tax lien, but you got to spend 9 years paying it in, correct? I mean,
right, exactly.
I mean, I don't know what the exact numbers are, but yeah, so I learned something huge right there.
Yeah, I spent about $4,400.
Okay.
And you know what, Rick? I just wish that back then I had known about investing with a self-directed IRA or 401k, and I was using, but, you know, you live and learn.
Yeah.
And this is what I teach my people now. You know, this is what I teach my students now how to do. Okay.
Yeah, but I love that. How you know, oh, I'm sorry. I just love how you can do an investment like that. If it's hard for you to come up with $5,000 at a time, you barely notice $200 or $400 a couple times a year, and then earning incredible interest for you. So it's not only like an easy savings plan, but it's multiplying for you at the same time. I love that.
Right. Right.
Okay.
Okay, one of the other myths about tax liens, and we talked about this before, that you're guaranteed to get paid on your lien. These gurus throw out that word, and it's government guaranteed. And they make people think, well, they're guaranteed to get paid, so they could go out there and just buy tax liens. They don't have to do their due diligence because they're guaranteed to get paid. You know, this is one of the myths that I try to bust and poke holes in and show people the truth. The truth is that you're not guaranteed to get paid. What's guaranteed is your rate of return should the lien redeem. You're not guaranteed that it's going to redeem. Your guarantee is the property. So do your homework. Do your due diligence on the property.
And you can manage that by picking a smaller slice of what's available instead of trying to go over a list of 10,000 liens. So that's another point that I've learned today. That's a good technique to make your research less. Okay.
All right, and this is the one that we talked about before, that you can buy a house for $500. It just doesn't work that way. Now, it does work when you go to a deed sale that you're actually buying the house, but you'll see in these deed sales that typically the minimum bid is higher than $500, and it gets bid up from there, and it will get bid up to a certain percentage of the market value. It's going to get bid up to what people want to pay for it. But as I mentioned before, is it worth it to spend $20,000 on a house that you can turn around and quickly sell for $80,000 to $100,000? Sure, sure it is if you have the cash.
But do you see the difference with people thinking they can go in there with $1,000 in their pocket and pick up a house that they can sell? That's much less likely to happen. And you might have to attend a few sales at least to get a deal like even you were talking about if you have the cash, right? You're not guaranteed to get a house at 20% of market value at a particular sale you go to. Some sales I've been to, they really bid them up to retail value, and there's no opportunity that I can see at all. And others are less attended, and you can find deals occasionally like you're talking about. Is that sort of what you found? with tax deed sales?
Yeah, that is absolutely true. And I suggest that people that are interested in doing this, you know, I have people ask me all the time. I'll have somebody from California or somebody from, you know, somewhere around the country ask me, well, how competitive is it where I live? And I just have to email them back and I say, I don't know. You go to the sale and find out. I can't know how competitive it is where you are. I can tell you how competitive it is where I am. The way to find this out is to go to tax sales, and you can't just go to one tax sale. You have to go to different tax sales in different areas around you. Go to all the counties around you. Find out. And what I would suggest is stay out of the areas where everybody wants to be, where all the jobs are, where all the houses, you know, where all the nice houses are, where people want to live. That's where the competition is going to be. So go, you know, a friend of ours, Rick, Jack Bosch, when he does his program, he always advises people to go at least 2 hours away from a big city. To do, and he has a different strategy, and it's related to, and the reason why we both know him is because all our businesses are related to tax sales in some way or another. But his thing is, you know, buying the property before the sale, and land. He focuses on land, buying it cheaply before the sale. And but what he tells people in order to do it, and I imagine that this would work for your deed grabber strategy as well, is to go away from the big cities where people want to live and work.
Yeah, it always helps to have less competition. I think it's the most so at these public auctions, though. If we're going to deal with the owner, we do have a chance of still kind of having the same profile of owner, whether it's in a city or further away. But for auctions, for sure, you know, where there's more people with money and more people that are going to attend the sale. And again, I'm not a big believer in tax deed auctions. I've heard of people getting great deals, but I think you sometimes have to really work at it and get disappointed several times before you can get something that you want, and then you're going to have to pay a significant amount for it, at least. Like Joanne said, maybe you're getting it for, you know, half of value, even a quarter of value, but that's still going to be 5 figures in most areas. You know, you're still going to have to go in there with a whole bunch of cash, and you might have to attend a few sales and kind of get a feel for where the least attended sales are. So it takes a little work to do that too.
Yeah, so the thing about what you and Jack do is that you're cutting down on the competition because you're doing this before the sale, so you're not even going to the sale. So you're cutting down on the competition there. But what and to be quite honest with you, I don't really do much deed sales. But what I do is the lien sales. And what I like about tax liens is I don't have to negotiate with anybody. I don't have to send letters out. I don't have to make phone calls. Don't have to negotiate with anybody. Now, am I going to wind up with the property? Probably not. Okay, so if property is what you want, then you got to negotiate. You got to negotiate with people. You've got to do one of those other strategies. But my strategy is I want the return on my money. So
and I was going to bring this up at the end of the call, but I'll just bring it up now. You know, if anybody on this call sort of likes to work behind the scenes and they don't really, like Joanne said, they don't like talking to people on the phone, let's say, or they don't like haggling, or they don't like, I don't find myself doing much haggling, but you know what I'm saying. If you just, you know, if you kind of like to just do your research to yourself and operate something from home, not have to deal with clients, this is really sort of a perfect business to be in too. You're really just, in fact, I'm sure you're going to mention it a little bit with these online auctions, you probably don't ever have to leave home in a lot of cases to be able to get your investment done. So it's really suitable for you if that's sort of your tendency.
Yeah, that's right. That's right. And that's one of the things I love about it. And I think that's why I was able to do this, even though, you know, the other methods of real estate investing just weren't my cup of tea. I never really did get going with it. So, all right, let's switch gears and talk about the basics of tax lien investing. So what do you need to know? I told you what you needed to avoid. I told you about some of the myths. So let's go back to school and learn what you need to know, okay? To have a profitable tax lien portfolio, there's only 2 things you need to do, all right? One is you got to buy good liens, and the second thing is you have to sell them. You have to get your money out, and there are three ways to do that. They're either going to sell or redeem or foreclose. Okay, so let's talk about buying good liens. I'm going to give you 5 steps to buying good liens. So get out your pen and your paper and take some notes. Okay, the first step is choosing where to invest. Now, don't pay attention to the X's on this map. It's just for show, okay? And the best place for you to invest could be different than the best place for me to invest, or the best place for anybody else to invest. I usually suggest that people start in their own backyard because they know the property value's there and it's easier to do the due diligence there. However, if you live in a deed state and you want to invest in liens, then I suggest that maybe you go to a place where you like to visit, or where you have a relative or somebody that can look at property for you. Now, some people, I have clients that don't even live in this country, they're in another country, so they're limited to the states that have online sales. Okay, and there's other things you have to look at as to your goals. Do you want your return on your investment, as I do, or do you want property? If you want property, you should concentrate on the redeemable deed states and the deed states, not the lien states. Okay, if you have a little bit of money to start with, you're going to want to concentrate on liens, not deeds, because with deeds and redeemable deeds, you need more money to get started. So these are just a few things to take into account when you're choosing the best place to invest. And in my course, my Build Your Profitable Tax Lien Portfolio course, we spend one session just on choosing where to invest. What we bring into, what your goals are for investing and what happens in the different states. Okay. Step number 2, once you know where you're going to invest, is then you have to find the tax sale information. And what you see on this slide is a screenshot from Tax Lien Lady database, which is in the members area of taxlienlady.com. And this is a database where you can actually do a custom search and find out what tax sales are coming up where. And you can also get the tax sale lists, both the free lists from the county, and you can order enhanced lists, which greatly cuts down your time spending in due diligence because it gives the information. You see on those lists that the county provides, they don't always give the address of the property. Sometimes it's just the owner and the property ID. So when you purchase a list, you get the address of the property, and you get the you get some other information like what type of property it is, where the property is, what town it's in. So you get some information that will help you with your due diligence. So that's one way you can find out about the tax sale information. But again, in my course, I spend a whole session on how to find this information out, where to go. Now, step number 3, once you know where you're going to invest, you have the tax sale information, then, as we talked about before, you have to do your due diligence on those properties. And what you see on this slide is a copy of a due diligence report that came from the software program that I use. But in my course, not only do I show you that program, I show you how you can make your own a spreadsheet, so that if you don't have a software, and I also give you other software programs that you can use that are not quite so specific. They don't have a due diligence report like this, but I also show you how you can make your own spreadsheet, and also give you tips on doing due diligence. There's certain things that you need to do. Now, this due diligence report is something that I used when I had other people that were doing due diligence for me, so that they could report certain things also about the municipality, like the address of the tax collector, when the tax collector was in, the tax collector's phone number. But you also see there's certain things listed about the property on here. There's the in New Jersey, we use block and lot. In other counties, you'll find a parcel ID instead of the block and lot. Then the property address, the amount due on the property, and the type of lien. U is for utility, T is for tax, and then sometimes there's a C, and that is combined. And this, by the way, comes right from the the tax sale lists that we purchased and downloaded into our program. This information comes right from even down to the comments. Then you'll see the total assessment. It has the assessment data, the annual taxes, and even the comments. So what we would do, typically we would not use these comments. Like that first property that you see on this list, it says 1SF2G, and that means one story, a single family with a 2-car garage. Now, I would not trust that because I don't know when they did their due diligence, so I would go out and look at it or have somebody look at this property, and I would write in my own comments, and I could actually type it in and have it print out on this sheet and take this with me to the sale if I wanted. But then we would get these due diligence reports back, and from these due diligence reports, we would figure out which properties we wanted to bid on and just how much we could pay for them. Okay, so so that is step number 3, doing your due diligence. And again, we spend a whole session on this in the Build Your Profitable Tax Lien Portfolio course. Now, step number 4 is to prepare to bid at the sale. There's certain things that you have to do. Okay, now I'm not going to go over all of them. What you see here is a bidding form. What we would do is we would take the information from that due diligence sheet, and then we would decide which properties we were going to bid on. And you see this first column that says bid, and it's no, 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 no on all these properties, okay? And if we wanted to bid on them, we would check off a box, and it would change that no to a yes. And then in this column, this is specific to New Jersey. This basically tells us how much premium we could pay and still get, it's kind of technical, but it's how much premium we can pay and still make 5% was our investor's bottom line on a lien that we held for a year and paid all the subsequent taxes for a year. So, and that's just something we decided, that our investor decided that was his bottom line that he wanted to make. Now, when I bid on properties, I never paid attention to this. I never paid premium. I got most of my liens at 18%, and that's because of my bidding strategies, and that's a whole nother thing that I talk about in a whole nother session. But then there's also a place here to put the amount that's bid and who the successful bidder was, so we can keep track of what other people are bidding and who is, who are the successful bidders, who our competition is. We can keep track of our competition and what they're bidding. And this is all in a software program I use, which is, for anybody that's interested, it's called Tax Lien Manager. But I also, again, show you how to have your own, if you don't have a software program, how to have your own spreadsheet to keep track of this information for you. Okay, so, and this is only part, by the way, of step number 4, which is preparing to bid at the sale. There's other things that you need to do. You need to register for the sale. Sometimes you have to have a deposit. But again, we go over all this in the Build Your Profitable Portfolio course, home study course. Now, step number 5, okay, so you've decided where you're going to invest, the best place for you to invest. You've got the tax sale information, you did your due diligence, you got ready to go to the sale. Well, what's next? You actually have to go to the sale and bid. And this is where we talk about bidding procedures and bidding strategies. Okay, because as I mentioned before, I don't pay premium for my liens. I get most of my liens at the maximum rate, okay? Okay, but here's the problem. Now, I just gave you those 5 things that are the basic things that you have to do to buy good liens, all right? But here's the problem. And remember, once you buy the good liens, it's when they redeem that you get paid. It's when either or you could sell your lien to another investor. That's called an assignment. You could assign your lien to another investor if you don't want to wait for it to redeem, or wait to be able to foreclose. If you don't want to wait to the end of the redemption period, you could do that. Or you get to foreclose. Those are the 3 ways that you get paid, okay? But here's the problem with all that, is that of course you don't get paid to do those 5 things that we just talked about. You don't get paid to pick the best place to invest. You don't get the tax sale, you don't get paid to get the tax sale information, okay, unless you were one of the people that I hired to do this for me back when. You don't get paid to do your due diligence. You don't get paid to prepare to bid at the tax sale, and you don't get paid to be a successful bidder and buy a lien. You don't get paid for it. Okay, here's how you make money. As I mentioned before, either your lien redeems, and more than 90% of the time, this is what's going to happen, or you foreclose, and in most states you need to use a tax lien attorney to do that. Now, I have to say here, the state of Florida is the only state that you don't actually get to foreclose on the lien. Instead, you apply for it to go to a deed sale. So you will get paid on your lien. You have to apply for it to go to a deed sale. When you apply for it to go to a deed sale, you get to pay any subsequent taxes or subsequent liens, and you get the maximum rate on that, by the way, which is 18%. But you, in other states, you actually get to foreclose on the lien, and you need to use a tax lien attorney. And I must say that what happens is, more than likely, sometime during this process, the lien is going to redeem. I mean, I had a couple of vacant lots, building lots, that I thought I was going to be able to foreclose on because I thought there's no way the builder is going to be able to redeem these. Well, he didn't redeem them. The bank did. So that's usually what happens, especially if there is a mortgage or loan on them. Now, the other way you get paid, as I mentioned before, you can assign or sell your lien to another investor. Okay, so are we ready to make a change for 2011? If you are, you can just reach out and gently touch that big blue button on your screen, and remember the myth. You buy some tax liens for $500 or less each, right? Most of them redeem, but you get to foreclose on a property. And you sell this property at a huge markup, and without having to do any major fix-up, ha ha ha. You do this again a few times and you get rich. Okay, I'm not promising you that. I am not promising you what you've heard these gurus say. That's not what I'm going to tell you. Okay, this is what I have for you. Okay, I have been able to use this, and I've told you only a couple of the liens that have, and the only reason I told you about these is because they're the ones that are redeeming now. Okay, but over the years I've been able to build up a retirement account, and outside of my retirement account, money that I can use for now, for tuition payments for my sons, for things that come up. Okay, I know, yeah, I should be reinvesting that for the future, but that's why I have a self-directed IRA. So what I have for you is a Build Your Profitable Tax Lien Portfolio Workshop for 2011. Okay, this, by the way, is just a representation of the course. It's actually fully online, and it includes coaching with me so that I can help you choose where the best place to invest for you is, and show you how to get the tax sale information and plan your next steps. Okay, then it consists of the online home study course. And in the online home study course, you're going to learn how to do your due diligence, how to prepare to bid at the tax sale. You're going to learn about bidding strategies, and you're going to learn how to protect your investment, because there's certain things that you have to do to protect it. Remember, we talked about your lien can expire, worthless, if you don't pay attention to it. Well, there's other things you need to do. In some states, you have to record that lien, or it doesn't mean anything. Okay, same with a deed. Some places will record the deed for you. Others, you need to record it. There's things that you have to do. Also, when you purchase a deed, you need to clear the title to the property. There's things that you have to do to protect your investment. And then I'm going to show you how to cash in on your liens, whether you want to assign it or force redemption, or what to do in order to foreclose. So what I'm going to do is show you how to build the foundation for your profitable tax lien portfolio. And here's what you get with the Profitable Portfolio Workshop. Again, it's all online. You get 1 hour coaching session with me, which are strategy sessions, and you can break this up into 2 half-hour sessions, which is what I recommend to do. One to get you started, and one later on when you have more questions. You get instant access to the home study course and the online lessons, instant access to Tax Lien Lady members area, where I have that Tax Lien Lady database that I showed you, where you can search for tax sales, get tax sale information, get links to the all the county websites that you need to do your due diligence. You have you get 2 months of membership in Tax Lien Ladies members area, which is almost $100 value there. And here's what you get in the Tax Lien Lady members area besides that. Live monthly webinar trainings, plus the recordings, slides, and resources for all of the trainings that I do. Free access to the database that I mentioned, where you get the tax sale information, tax sale lists, links to do your due diligence. There's a marketplace for buying and selling secondary liens and deeds, and a tax lien investing forum. You also get my state guide that lists all the states and gives you a summary of how each state operates, what happens in each state. And it breaks the states down into deed states and lien states. And you also get another 30-minute personal coaching session with me, and an online step-by-step tax lien investing course besides the one that, besides the Build Your Profitable Portfolio course. There's another shorter course in the members area. Okay, so, here's the value. This is the point, folks, where people go through, gurus go through, and they tell you, oh, look, this is what it's worth, this, you get all this, and yeah, it's worth, almost $2,500. You know what? I'm just going to skip that and cut to the chase, and it's yours today for $497. That's all I'm charging for the entire course and all the bonuses. And you can get it at taxlienladytraining.com. So, Rick, I want to stop there and see if you have any more questions, whether it's about tax lien investing or whether it's about the Build Your Profitable Portfolio class. I'll be happy to answer them for you.
Well, yes, I do. First, I wanted to say that that's just a spectacular value that you have out there for everybody. And, if you're at all thinking about investing in tax liens, now you've kind of seen what the reality is, and it might not be the reality you thought it was when you got on the call, but it's still, it's just as good. It's just really, realistically, it's an investment, and you can get started with very little to get started with your investment. And as Joanne showed you in a couple examples, there's many cases where you can double your money, and I'm sure we all know the magic of compounding. If you can keep your money going at 10, 20, 30% interest, it doesn't take long for your nest egg to take off. And Joanne, this is one of the only programs I've ever seen at this price level where you're actually going to give each student, is it a number of training calls? Is it two or three personal calls that they'll get with you, with the portfolio work stuff?
Yeah, they initially get an hour with me that they can split into 2 30-minute calls, and then later on they get another 30-minute call. So, and they get a couple months in the members area where there are live webinars, training webinars each month.
So you can have access to Joanne to, you can look at the material. Again, of course, the first step is to decide where to invest. And this kind of plays into one of my questions I had, which is, we talked about a million different facets of tax lien investing, and some people might be saying, oh, that's just too much for me to take in and learn. But what really happens is you settle on one particular area, maybe 2 particular areas, and that's where you invest, right? And you just learn those rules. It's not an overwhelming amount to learn about one area or 2 areas very well. You can't learn about every county in the entire country. Even you and I can't do that. But to pick your particular area that you're going to specialize in, you just need to learn rules for a couple areas, and that's where I think that training call or a consultation call with Joanne up front would be very useful. You could pick a few areas that you think would be suitable for your investment, and then during that 30 minutes or an hour, you could go over what your goals are, and you'll assist anyone that gets involved in the course to make sure the area they picked sounds good, right?
Yeah, that's exactly why I do that coaching call in the beginning. I want to do it in the very beginning, that first call, and what I want to do is help people choose the right area to invest, because I think that's so important. And I really suggest that they start off in one area and get good at that, and then once they're good in that area, then they can branch off to other areas. And when I say area, you know, it could be one state. They could be going into a lot of different counties in one state. But as I mentioned before, each state is very different. So it's better to start in one area and then move on from there. That's exactly the way I did it. I started in New Jersey, and then after a while, then I got into the deed investing in Pennsylvania, and then after a while, I got into the online investing in other states. But guess what? I didn't do that all myself. I don't actually do the investing in some of those other states. I have it done for me with a tax lien investing fund, a fund manager that I know. I've had my money invested with her since 2008, and I'm very happy with the returns. And whenever, and this is a private fund, by the way, it's not a public fund, so whenever she opens another private fund, they all have a cap on them and they have a deadline. So whenever she opens another fund, the first people to find out about it are my members.
All right,
and then
well,
I let
great.
everybody else find out about it, but I always give that option to my members first.
And your members do get access to your recommended other tax sale agents, I believe you call them. You do give access to those recommended. So, you know, folks, as Joanne said, when she got started, she did it all on her own, and you can do it all on your own too. But I think it'd be very foolish to waste years of your time and probably make some mistakes that would cost you well over $500 and just have to do it all on your own, when you can have one of the premier experts in the country guide you along your path and really get you started right away. So I give Joanne my full endorsement, and you know, I really give very few people in the tax lien industry my endorsement, because as we talked about, most of them will try to entice you in with really bogus or misleading examples and stories and stuff like that. And Joanne really has impressed me all along with the accuracy of her information. And you see there's still exciting opportunities, and we don't have to sit here and basically lie about everything to get you just an awesome opportunity for investing your money. So go over to taxlienladytraining.com and get into Joanne's training while she's still offering this deal. I think you're charging about half what you should, Joanne, but I guess that's between you and the students, and it's to their benefit.
Well, so. I know I'm less than what other people are out there, but you know what? I want to make it available to as many people as possible, because what I don't want them to do is wind up spending more money on something. I know for a fact, because I've had people tell me this, that I give away for free what most people charge a couple of $1,000s for. So, you know, what you're spending, you know, $497 on is worth a heck of a lot more than that. I know that, but I want to make this available to as many people as I can. And I want to, Rick, if it's okay, I'd like to leave everybody with a couple of tips.
Sure.
About tax lien investing. And this goes back to what you were saying before about doing it yourself. One reason why it's hard for the individual investor in the online tax sales to get liens at double-digit returns is because some of these online sales let the investor have sub-accounts. That means that the investor is able to give different ID numbers and get different bidder numbers. Now, they have to have a different ID number for each bidder number. So if you're going to invest in the online sales, and maybe you're going to give your Social Security number or your business's EIN number, and then maybe that of your husband or your wife or a couple of your kids, and you've got only a handful of bidder numbers, okay? And then this institutional buyer comes along, and it could be a tax lien investing fund or a tax lien investing agent or a bank or somebody else, but they have all these bidder numbers. They can have 30 or a few thousand bidder numbers.
Oh my God.
And so you see the benefit that they have over you. Now, if you're investing on your own, that is a big disadvantage, because what happens is if there are a few hundred or a few thousand bids at one number, let's say at 12%, there's a few thousand bids, and that's the lowest number, let's say, at one of these sales. Well, then the winner is chosen randomly between all those bids. Now, they have this big, huge benefit if they have all these numbers to bid with, all these different bidder numbers.
They own 80% of the bids, so they have an 80% chance of being awarded the random
exactly.
lien, right? Wow.
So
Okay.
where do you think, if your strategy, if you decide that you, and for some people this is all they can do because maybe they don't live in a lien state, or maybe they don't live in the U.S., and so they're limited to these online tax sales. So what chance do you think you have if you're bidding on your own, or don't you think it's much easier if you just invest in a fund or with an agent and let them do the bidding for you? Besides the fact that they're experienced, they have the fact that they can get all these bidder numbers. So they have a much better chance of getting a decent rate on a lien and getting the bid than you do. So that's one thing I want to leave with everybody. The other thing is that, and I've mentioned this a couple times during my presentation, is that I've learned the value of investing with a self-directed IRA. And that's another thing I provide in all my courses, at least one webinar replay where you can listen to somebody who's an expert on that. And the more I interview these people, the better I'm getting at it as well. And now, when I started, I didn't know as much as I know now. So I did this in my own name, with my own money that was not in a retirement account. But now I'm also doing this with money from a SEP IRA. But what I plan to do, and what I wish I had known about it more when I started, is a Roth IRA. But then beyond that, even better than a Roth IRA, is a Roth solo 401k. I never knew that you can invest with money from your 401k. And the great thing about a 401k over an IRA is that you can actually borrow money out of that account if you need it, and it's safe from any creditors that would try to sue you or claim your money. So the more,
I think a lot more people have 401ks than IRAs, I'd be willing to bet, too.
Yes, but they're not self-directed. But they're not self-directed.
Are they?
So,
can you convert an existing IRA to the best of your knowledge, or an existing 401k?
You can. There is what's called, and this is something I've only learned about this past year, a solo 401k that you have to have a business to have one. But there's so many advantages to it that it's worth it to start a business so that you can start contributing to your own solo 401k. So that's my next step. It's something I haven't started yet, but that's in my mind. It's my next step. And as I do these things, I teach them as well. So while I'm learning, everybody else can learn about it as well. We can all benefit. So those are some of the other things that you get as part of my members area, and it is those type of benefits, finding out not only about tax lien investing, but about, what's the best way to invest? What are the best vehicles, the best ways to do it? Like, what kinds of accounts to have your money in that you're investing with? Different things like that. So
yeah,
there's just a lot more to it.
The details can make all the difference. It sure can. And so it's great to keep up to date with the latest information as well. So we're probably going to wrap it up, folks. We're about 5 minutes over, but I really encourage you to go over to taxlienladytraining.com if you're at all interested in tax lien investing. This is the most comprehensive and most accurate training I've ever seen out there. And I hope you all learned a whole lot today about tax lien investing. I know a couple of my biggest roadblocks were taken care of today, Joanne, so I sure appreciate that. And
oh, great.
I really appreciate you coming on the call today.
Well, thank you for having me. It's always fun for me to talk about tax liens. It's one of my favorite things to talk about, as you could tell.
Yeah, well, obviously.
And I'm always glad when I can answer somebody's questions and help you out. So.
All right. Well, I appreciate it. Again, folks, last time, taxlienladytraining.com. I can't imagine Joanne's going to keep this offer at this price going very long, because she's going to spend an hour, actually an hour and a half with each and every one of you, and that alone is worth the price of the training, and will keep you from making potentially very costly mistakes while getting it going so much faster. So taxlienladytraining.com. Joanne, once again, thanks again for coming on, and look forward to maybe doing another call with you in the future sometime.
Great. I look forward to it too.
All right. Have a good day, everybody.
Bye-bye.